All right, the rules of the EU crypto game, they are changing overnight. The Wild West era is officially closing for good, and this highly regulated new frontier is arriving fast. So let's jump right into this explainer on the massive regulatory shift hitting the market on July 1st, 2026, and exactly how it's going to impact your specific portfolio. Because the reality right now is shifting incredibly fast. Regulated access, it's basically becoming a massive competitive edge. Just look at Austria's Financial Market Authority recently authorizing Whitebit EU under the new MiCA regulations. We're seeing these golden gates open up, but only for the strongest, most compliant platforms. It's totally clear, MiCA is Europe's ultimate trust filter. To make sure you're actually ready for this, we're going to hit 5 quick points. The looming MiCA deadline, how to check your own exchange, dealing with stablecoins and self-custody, spotting new market signals, and lastly, the KINGFINITY ecosystem. Let's start with Section 1. The MiCA deadline looms. So, July 1st, 2026. Circle it, highlight it, whatever you need to do. MiCA, which stands for Markets in Crypto Assets Regulation, basically dictates that after this date, any crypto service provider without an explicit MiCA license is operating illegally in the EU. Period. They have to halt services. Think of MiCA like the ultimate club bouncer. If your exchange isn't on the VIP compliant list, you're getting kicked out, meaning your trading, depositing, and withdrawing could just freeze. And here is the crucial trap a lot of people fall for. The famous brand name on your phone screen, it means absolutely nothing. What actually protects you is the specific legal entity buried way down in your user agreement. Just because an exchange is this massive global titan doesn't mean your account is safe. You could legally be tied to some random offshore entity without even realizing it. Which brings us to Section 2. Check your crypto exchange. Think of your capital exposure right now like a traffic stoplight. Bybit EU GmbH, they're green. They've secured Austrian FMA approval, so as long as your account is with that specific EU entity, you're good to go. In the yellow zone, we've got Bitcoin.eu. They use a BaFin-regulated German bank, but you still got to verify their specific MiCA status. KuCoin is also yellow. They got a license, but the FMA put out an operational warning that they can't actually start operations until certain conditions are met. And then there's Binance, currently flashing red with critical risk, mainly due to all the uncertainty around their Greek license application. If you've got heavy bags sitting there, reports suggest you're facing the highest risk of sudden service interruptions. So what to actually do? Here's your personal survival guide. Do not trust the marketing emails. Go straight to the source. Head over to the European Securities and Markets Authority, ESMA, and download their interim MiCA register. Next, check your exchange's terms of service, find your exact legal entity, and match it to that ESMA list. Check that the services you need are approved, and confirm the status says active. It is literally that simple, but you absolutely cannot skip this step. All right, Section 3, stablecoins and self-custody. So MiCA specifically targets what they call asset-referenced and e-money tokens. In plain English, non-compliant stablecoins, and yes, that could potentially include heavyweights like USDT, might face sudden delistings or restricted trading pairs on EU platforms. You need to audit your stablecoin exposure like yesterday. You really need to consider if pivoting to euro-backed stablecoins or fully compliant USDC alternatives makes sense for you before the deadline, otherwise your liquidity might just get totally trapped. And hey, if you trade with leverage, listen up. If your platform loses its ability to serve EU customers overnight, any open futures or margin positions are at severe risk. We're talking forced closures or getting caught in massive volatility as liquidity completely vanishes. This is the big, hidden risk of this whole transition. When it comes to wealth preservation here, remember one golden rule. MiCA brings oversight, sure, but it does not guarantee a bailout. Crypto on an exchange is not a bank deposit. Let me say that again. There is absolutely no statutory deposit insurance for your crypto. Because of this, moving your long-term holdings to a hardware wallet is absolutely crucial right now. Keep only your active trading capital on centralized exchanges, and please audit that USDT exposure before the clock runs out. Moving on to Section 4, New Era Market Signals. It's pretty wild to see how meme culture IP is successfully crossing over into the actual physical world. I mean, when projects like Pudgy Penguins are hitting actual retail store shelves, that is a massive mainstream momentum signal. When culture bridges that gap from on-chain liquidity to a physical toy aisle, it's a huge sign the space is maturing way beyond just internet speculation. We're also seeing the next major evolution in crypto security. As the market institutionalizes under MiCA, due diligence is completely shifting. We're stepping into this era of AI-driven smart contract scanning that can directly neutralize those predatory MEV bots, literally by turning their own logic against them. It's a fascinating look at how security is actively leveling up to meet these new strict regulatory expectations. Plus, we are witnessing this massive merging of traditional finance and DeFi. The walls between Wall Street and decentralized finance aren't just coming down, they're being totally rebuilt. Institutional real-world assets like tokenized Tesla and Nvidia stocks are actually being used as collateral on decentralized chains through platforms like Venus on the BNB chain. Traditional stocks acting as DeFi collateral, that's creating entirely new cash flow and lending opportunities that were practically impossible a decade ago. And finally, Section 5, the KINGFINITY ecosystem. In this new, highly transparent era, tokenomics have to be absolutely spotless. Take KINGFINITY, or KFX, for example. Their structure heavily favors a treasury framework at 35% and public distribution at 30%. With only 10% going to the team and founders, well, that's the exact kind of equitable, community-first distribution model that regulators love to see, and it really builds long-term trust in a post-MiCA world. Launching on October 7th, 2026, KFX represents this premium, community-driven ecosystem built on the super-fast Solana network. With a 1 billion token supply, it's really designed for long-term ecosystem development. You know, this is exactly the type of project that thrives when all those old regulatory gray areas are finally cleared out and institutional capital actually feels safe enough to enter. So you've got the playbook. The clock is ticking down to July 1st. I'll leave you with this to think about. When the golden gates of MiCA finally slam shut on the unregulated Wild West, will your portfolio be trapped on the outside, or will you be holding the keys to the new compliant frontier? Go check those user agreements, secure your assets, and we'll see you in the next era of crypto.